Okay, so in this video, we are going to talk about candlesticks and time frames. So, when you are looking at candlesticks, when the market is going up, it will print a green candle. And when the market goes down, it prints a red candle. Okay, and we want to look at candlesticks because it gives us that nice view when it comes to looking at the market. Now, when it comes to candlesticks, you have the open, the high, the low, and the close. So we're going to go over that right now. So right here, guys, we have a green candle. Remember, the market goes up and it prints a green candle. So this is where it opened right here. This is where it closed. And this is the high and the low. All right. Now, it's the opposite when it comes to red candles. When the market goes down, you will see a red candle. This is the open. This is the close. This is the low and the high. Now, to me, the most important price is the close price because you want to see how strong the candlestick looks when you are, looking at the market. So that's what I pay attention to, is the close price. Now let's go to the time frames. Now before we go to the time frames, let me just give you a quick example of what we just talked about. So we have an up candle right here, it opened right here, right, and it closed right here. Now notice that we have these little tails right here at the bottom. We call those wicks. And basically, let's say that this is a 5-minute time frame. So in between, the market go up or down, but all we care about is the close price right here. Okay, so we have a down candle right here, and it opened right here. It opened right here, but it closed right here. And notice how we have the tail. We have a tail right here, and also have a tail right here. So that's the high and the low. Okay, so let's go to the time frames. Okay. So when you are trading the market, all right, you are looking at different time frames. You have the daily time frame, the 4-hour, the 1 hour, 15-minute, 5-minute, and 1 minute. Okay. Now you have more than that. Okay, you can basically look at what they have, but every candle right now we want a daily chart. So every candle represents 1 day. So this is 1 day right here. This is February 24th. Okay, this right here is February 25th. Okay. So every day, every candle is 1 day. Now when we go to the 5-minute chart, every candle is 5 minutes. So right here, this is 7:50 a.m. This is 7:55 a.m. This is 8 o'clock. Okay, so every candle is 5 minutes. Same thing with the 1-minute chart. We go to the 1-minute chart, every candle is 1 minute. Okay, so this right here is 10:14. This right here is 10:15, and so on. So what time frame do you want to use when you are trading the market? Well, it depends on if you are a day trader or a swing trader. So what's the difference? Well, day traders, they are looking to take trades during the day and they don't hold overnight. Okay, now swing traders, they don't get out their trades the same day. They usually hold for 2 days or more. Sometimes they're going to hold their trades for weeks or even months. Okay, so when it comes to swing trading, you're probably going to look at the daily chart, okay, and you take your entries on either the 4-hour or the 1 hour, okay. So let's say that you're looking at the market right here, okay, and you're looking to sell the market, and you are on a daily chart and it looks, bearish, okay. Then you can say, all right, let me go to the 1 hour. Let me take a trade right here. Okay, and this trade can last for a good, let's say you take a trade right here, and this trade can last for, maybe a couple of days, 3 days, 4 days, and so on. So that is a swing trader. Now a day trader, okay, is a person that's going to the 5-minute or the 1-minute chart, or sometimes even the 15-minute chart, okay, and we're looking at the smaller time frames because we're not looking to hold overnight. Okay, so right here, let's say I'm taking a trade right here, and I like this, and it looks like it's at support, and I'm buying this candle right here, and I'm targeting the high right here. This is what at least no more than 20 or 30 minutes. So I'm not in the trade that long. Okay, so day traders, we are not in trades that long. We're looking to get in, get out, and be done for the day, and not hold anything overnight. Now let's talk about different terms that I was just talking about. So we said bearish. So what is bearish? So bearish simply means that the market is going down. So if the market is going down, like right now, the market is in a downtrend. Okay, and we're gonna talk about downtrends later. But when the market's in a downtrend, okay, it's not trending up anymore, especially if it breaks key levels. Okay, we're gonna talk about that later on. Okay, that's a bearish market when it's trending down and it's breaking key levels when it's going down. Now, a bullish market is when the market is going up. So a bullish market is when the market is going up, is making higher highs, higher lows. Again, we're going to talk about that later. So that is the candlesticks, time frames, and going long and going short. Let's talk about that. So when I say go long, okay, that simply means that you're buying the market. Okay, long means up and short means down. Okay, short means you're selling the market. So how do you sell the market? All you have to do is press the sell button. It's the same thing as going long, okay, but it's the opposite. So we, day traders, or even swing traders, we have the opportunity to trade both ways. We could trade on the long side or the short side. So let's say that this market is not looking strong anymore to the upside, and we think that the market will go down. Well, we can hit the short button, the sell button, and we can actually make money when the market goes down. All right.